with me from Capital Network this morning, I've got Ed Stacey. Ed, good morning.
Good morning.
Just a reminder for Ed's full report, click on the eye in the top right-hand corner of your screen. Ed, talking Castillo Copper this morning, tell us a bit about them.
So Castillo is a metal explorer, mostly focused in southeast Australia, with projects covering copper, zinc, nickel and cobalt. The big focus for them is a project called Jackaderry, which is in New South Wales. That contains a mine that was mined over 100 years ago. But what Castillo believe is that outside the envelope of the historic mine works, there are further deposits of very rich ores. So that's what they're looking for there, and looking to expand the envelope of the ores that are known down there. Now, the reason we wanted to write about it right now is that the company had a release out last week giving some results from testing that's been done at that site. A lot of positive results. The company's described it as a demarcation point for the project, and I think we can expect over the next 12 months to get further flesh on the bones of that argument. Now, specifically, I'm talking about, it's a report they put out on September the 3rd, and they talk about extensive presence of massive sulfide mineralization. What that means, massive sulfide is basically a category of ore, and it tells you that there's going to be some high-grade deposits there. And specifically, they've got copper grades of up to 10%, which is much higher than what's being mined generally around the world.
Right, so some pretty strong grades there. I mean, what as far as the economics of this project here, what inferences can we draw?
Yeah, well, this is one of the things we've written about in our report, with apologies to people who are very familiar with mining already. What you have in copper manufacture is a huge amount of the cost is actually extracting the rock from the earth, and then it's the crushing and grinding. A lot of processing goes on with the ore, and that's very expensive to do. Now, if you have a grade that's 10 times as rich as the global average, you've only got to grind 10 times less rock. So yes, it makes a huge difference to the economics of digging there. It could be a hugely profitable project for Castillo, and so yeah, we've detailed a bit of that in our report, how that translates into profitability.
And as far as the company's valuation here, is it all about the Jackaderry project?
Well, in share price terms, basically I think yes, they've got 3 other projects in Southeast Australia, and those could be important in future, but I think for now the focus very much on Jackaderry. Experience tells us that with a project like this, you will see a lot of sensitivity in the share price to any news about further assaying results. In terms of experience, I mean, there aren't a lot of precedents because you just don't get this high-grade ore very much. But one that we've looked at is a company called Sandfire, which is Australian listed. They had their big discovery 2009, 2010. And what you saw was, as news of that discovery came out in various steps, the share price increased 50 times, 50-fold, not 50%, 50-fold increase in the share price in the space of about 12 months. So, of course, we don't know that's going to happen with Jackaderry, but you can expect the share price to be very sensitive to any news flows that indicate positive results on this one. So watching closely that project in the next 12 months.
That's great, Ed. Just a reminder for Ed's full report, click on the eye in the top right-hand corner of your screen. Many thanks.
Thank you.